Alright, what's going on everybody? Welcome back to another video here on the channel, and today we're going to be talking about a situation that's been unfolding since like pretty much Wednesday now. And I've been kind of watching this all unfold live on like Twitter and through the news and everything, and just kind of watching everything kind of spiral down the drain here is just, part of it is fascinating, but part of it is also terrifying at the same time, you know? There's that one side of everything where it's like, wow, I'm really living through a major historical moment right now. This is the second largest bank collapse in US history. It happened in a matter of like 2 days. And then on top of that, on the other side, you think like, wow, this is the second largest bank failure in US history, and billions upon billions of dollars are on the line in this entire situation. Like, if a bank or a company of this size can just completely fold over and fall apart in pretty much the blink of an eye, man, what can really happen to pretty much anything that we know in the world, right? Like, if there's like one class of protected people in the world, you would think it'd be the bankers. They're the ones who make the entire economy run, and they're friends with all the politicians and everything, right? But no, this time around, like, the bankers are the ones taking the L. That's what's so surprising about this, right? Like, we don't usually see any sort of situation close to this, man. This is like a major deal for multiple reasons. Now, we're gonna break down everything about this situation in this video, so we're gonna go from basically like how everything happened, why it all happened, what the potential fallout slash ramifications can be, and basically just going over, well, what the hell exactly is going on with the entire Silicon Valley bank failure. So for those of you who haven't heard, the second largest bank collapse in US history just happened this week, and it unfolded quick as hell, man. It was like a complete lightning round. Once a few small little signs of instability in the entire thing showed, well, people started pulling money out and making moves as quickly as they could. People did not waste their time with this one, man. The moment that they saw an opportunity, like, oh, hey, this isn't going well, or we should try to reconsider our investment in this company, man, people were just getting out. And at that point, dude, like, if you're a bank and all your clients are basically just getting out and people are deciding like to jump ship, what can you really do? So regulators shuttered SVB Friday and seized its deposits in the largest US banking failure since the 2008 financial crisis, and the second largest ever. The company's downward spiral began late Wednesday when it surprised investors with news that it needed to raise $2.25 billion to shore up its balance sheet. What followed was the rapid collapse of a highly respected bank that had grown alongside its technology clients. Even now, as the dust begins to settle on the second bank wind down announced this week, members of the VC community are lamenting the role that others investors played in SVB's demise. Quote, "This was a hysteria-induced bank run caused by VCs," Ryan Falvey, a fintech investor at Restive Ventures, told CNBC, quote, "This is going to go down as one of the ultimate cases of an industry cutting its nose off to spite its face." So obviously this is a pretty major deal. Now, why is this such a major deal? Well, this actually might have a larger, more dangerous, and more widespread economic impact than a lot of people would realize at first glance. The issue here is that Silicon Valley Bank was actually supposedly funding nearly 50% of all startups, which means that a lot of companies, especially in Silicon Valley, as the name suggests and everything, were dependent on money coming from SVB in some way, whether they were an investor or whatever it may be, meaning that now that SVB is basically done and they've fallen over, they're dead, there's a lot of companies out there now that are now kind of left scratching their head, like, oh, what are we going to do? Like, how are we going to pay our employees? How are we going to continue operating? Now, a lot of this right now is actually being blamed on the US Federal Reserve. A lot of the argument that has been made so far is that because the Federal Reserve has been so aggressive in raising and hiking rates and everything to try and combat inflation, with the most aggressive rate hiking campaign in 4 decades running over the last little while here. But because the feds went so hard with this entire situation, it's basically forced situations like SVB here where they basically just go belly up because, like I said, man, once the cracks started showing, people were getting out left, right, and center. We're going to talk about that a little bit later here in the video, but let's go ahead and continue talking about all this. The roots of SVB's collapse stem from dislocations spurred by higher rates. As startup clients withdrew deposits to keep their companies afloat in a chilly environment for IPOs and private fundraising, SVB found itself short on capital. It had been forced to sell all of its available for-sale bonds at a $1.8 billion loss, the bank said late Wednesday. This sudden need for fresh capital, coming on the heels of the collapse of crypto-focused Silvergate Bank, sparked another wave of deposit withdrawals Thursday as VCs instructed their portfolio companies to move funds. according to people with knowledge of the matter. The concern, a bank run at SVB, could pose an existential threat to startups who could not tap their deposits. SVB customer said CEO Greg Becker didn't instill confidence when he urged them to stay calm during a call that began Thursday afternoon. The stock's collapse continued unabated, reaching 60% by the end of regular trading. Importantly, Becker couldn't assure listeners that the capital raise would be the bank's last, said a person on the call. So basically, this bank is in a shitload of trouble, right? You know, there's at the point here now, their stock price has fallen 60%, and that was at the end of trading. It could be completely different now. It's a new day. But things were not looking good. You know, this was basically the death blow. The company was pretty much at its last leg here, right? And when they basically say, oh, we can't assure that this capital raise will be the last, they're basically telling people that there could be even more future uncertainty in the company's dealings and in their cash and whatnot, right? They need money to try and even out everything here, and well, what if they don't raise enough money here? It could not be the last, basically, time that they would have to do something like this. And if they continually have to go through this, it's going to continue to degrade people's trust in the bank to basically continue functioning. And at this point, there's no real way that it's going to. This bank is pretty much done. There's really no way for SVB to get back out of this one, man. I mean, this is pretty much it. I don't see a way for them back. And legally, I don't even know if there is a way, really, for them to come back when everything's going to be said and done, when people get paid back and people withdraw all of their money. So, all told, customers withdrew a staggering $42 billion of deposits by the end of Thursday, according to a California regulatory filing. By the close of business that day, SVB had a negative cash balance of $958 million, according to the filing, and failed to scrounge enough collateral from other sources, the regulators said. Falvey, a former SVB employee who launched his own fund in 2018, pointed to the highly interconnected nature of the tech investing community as a key reason for the bank's sudden demise. Prominent funds, including Union Square Ventures and Co2 Management, blasted emails to their entire rosters of startups in recent days, instructing them to pull funds out of SVB on concerns of a bank run. Social media only heightened the panic, he noted. When you say, hey, get your deposits out, this thing's gonna fail, that's like yelling fire in a crowded theater, Falvey said. It's a self-fulfilling prophecy. Another venture investor, TSVC partner Spencer Green, also criticized investors who, quote, were wrong on the facts about SVB's position. Quote, it appears to me that there was no liquidity issue until a couple of VCs called it, Green said. They were irresponsible, and then it became self-fulfilling. So to put it in more layman's terms, you know, these VCs, aka venture capitalists, are people who, you know, they have their money deposited in this bank or whatever. In some way, shape, or form, they have business with the bank. Well, they hear something negative, they hear something that spooks them in some way, such as in this situation when basically the bank was telling them that they're gonna have to go on a huge capital raise because they're not sure they have enough money to really run things correctly. And these people just said, oh shit, you know, like, situation's bad, let's get our money out. And then, of course, when a couple people do it, the dominoes continue to fall. All these other investors are like, hey, what the hell's going on here? Oh, okay, we're all getting our money out of, you know, SVB here. Oh, okay, cool, let's go ahead and get out. And then, you know, from there on, people just absolutely were running the bank, man. And it's getting to the point where even physical locations of SVB have been absolutely overwhelmed by customers trying to withdraw their money. Now, here's one of the problems that people are starting to point out now. The vast majority of the money that was put inside of SVB by venture capitalists and companies that were working with them ended up being FDIC uninsured. So basically, there's FDIC, which is like a bank system of some sort, basically that insures and protects money. So like, you know, if a bank goes out of business or becomes insolvent like this, if they're FDIC compliant or whatever, basically, you know, up to like $250,000 per bank account is insurable with FDIC, so you can get that money back, right? So it's basically a safe check to make sure that in case something happens financially, your money is insured and protected, so, you know, situations don't just arise all the time where people are losing all their savings and shit, right? Well, the issue there, obviously, is that the majority of money in this was not insured this way, so there's not really a guarantee or even really a timetable on when people without that FDIC insurance on their money are going to be getting their money back. And there's a major list list of companies that started to come out in the last few hours that have basically explained, you know, a bunch of different company names that had money in this. One of them I noticed was like Roblox. They said they had like 5% of their money in SVB or something like that. People who were insured or whatever had their money insured FDIC-wise, you know, they're going to be getting their money back supposedly as early as Monday. As of right now, it is expected, though, that 80 to 90% of that uninsured money will eventually be paid back to people once they can find someone to take on, you know, the money that's in front of this entire big fucking mess now. So it's a pretty scary and insane situation because you see something like this, and like I said, you know, I feel like a lot of us, realistically, most of us, we look at these banks and stuff like this and we're just like, man, they're too big to fail. There's no way that something like this could even happen, right? Like, this isn't something you'd ever really consider. Like, hey, what if I wake up tomorrow and the bank is just done? Like, there is no bank left. The bank's closed because they're out of business, basically. Like, that's just not something that goes through your head very often, I feel like, right? You know, that's something that just doesn't happen very often, you know? And a situation of this magnitude especially, like, this isn't some local chain bank with 3 bank locations, right? This is Silicon Valley Bank. They are huge funders of a lot of startups in Silicon Valley and even out in California and all over the world with different clients, with billions upon billions of dollars on the line, you know? I feel like we kind of get to this point where we're like, oh, there's no way that the bank can fail. And then, you know, you see a situation like this and it just blows, like, for me at least, it blows my mind. Because, like, damn, man, like, there's nothing really safe in this world. Like, even the banks aren't safe. I'm sure, you know, they'll get bailed out by the government or something like that. You know, they're gonna find a way to try and brush this all over and make it not a big deal. But there's a lot of worry now, you know? There's a lot of concern from a lot of people out there that, hey, what if this isn't the last one to fall? What if the banks continue to collapse? What's gonna happen then? Well, I guess we're gonna have to wait and see. We don't really know what else is going on. As of right now, this is still all kind of unfolding, so if there's any major updates or anything to this story, I will make sure to let you guys know in a follow-up video. But as of right now, man, I just wanted to talk about this because it's just like, it's just crazy to see something like this go down. But with that being said, thank you guys for watching. If you did enjoy, make sure to leave a like, subscribe if you're brand new around here on the channel, follow me over on Twitter and Twitch at @subtooptimus. Make sure to check out Shoptimus down below. And until my next video, guys, this is Optimus, well, talking about the Silicon Valley Bank collapse and signing out.